Hey everyone, welcome back to Corporate Decoder, where we try to make sense of the corporate jungle. And today we're looking at a filing that sounds a bit like a corporate breakup, or maybe a rescue mission. Let's dive in. We're checking out a report from the RMR Group Incorporated filed on the 30th of October 2025. This is a current report, which means something important and perhaps unexpected just happened. The big news here is that Office Properties Income Trust, or OPI as they call it, along with some of its related companies, has officially filed for bankruptcy protection. They're going into Chapter 11, which means they're trying to reorganize their debts and keep the business running. Now, the RMR Group Incorporated, through its majority-owned subsidiary, RMR LLC, is a manager for OPI. When a company goes bankrupt, those management and service agreements can get tricky. To avoid chaos, RMR LLC has entered into something called a Restructuring Support Agreement, or RSA. With OPI and some of OPI's lenders, think of it as a handshake deal to figure out how RMR LC will continue to work with OPI after this whole bankruptcy mess is hopefully sorted out. Under this RSA, RMR LLC and OPI have agreed to the terms for new management contracts. These new agreements are expected to kick in once OPI successfully reorganizes its business. The plan is for RMR LLC to continue managing OPI's business as usual during the bankruptcy proceedings. Let's talk about what these new contracts might look like. The term sheet, which is essentially a summary of the deal, suggests these new management agreements will last for 5 years. For business management, RMR LC is set to receive about $14 million annually for the first 2 years. For property management, they'll get a percentage of the fees. Specifically 3% for property management and 5% for construction supervision, which is pretty much in line with what OPI was paying already. This whole restructuring for OPI is a big deal financially. The goal is to cut down OPI's massive debt. Right now, OPI has about $2.4 billion in total debt. The plan, if it works, will shrink that down dramatically to around $1.3 billion. That is a huge reduction, nearly cutting their debt in half. Now, like most of these reports, TRE's a whole section dedicated to telling you that what the company thinks might happen might not actually happen. They use words like believe, expect, and anticipate, but they're warning that actual results could be quite different. This is super important because it means that all these plans for OPI's restructuring and RMR LLC's future management roles are still up in the air. The success of this whole situation hinges on a lot of things going right. OPI needs court approval for its reorganization plan. RMR LLC needs to be able to meet its end of the bargain in the RSA, including finalizing those new management agreements. There are a lot of IFs here, and the bankruptcy process can be long and unpredictable. The report also highlights various risks. One of the biggest is just how long this bankruptcy case will take and what the final outcome will be. A lengthy bankruptcy can really hurt a company's reputation and its relationships with everyone involved, from tenants to lenders to vendors, and even for RMR, the company itself. Its clients, investors, and lenders can be affected. Another significant risk mentioned is the possibility that OPI's existing stock, or equity, could be completely wiped out as part of the restructuring. This is a common outcome in bankruptcies where lenders and creditors get paid back before shareholders. And finally, we see the sign-off from Matthew P. Jordan, who is the Executive Vice President and Chief Operating Officer of the RMR Group Incorporated, dated the 31st of October 2025, indicating this report was official as of the day after OPI filed for bankruptcy. So, what does all of this mean for the RMR Group Incorporated? On the surface, it looks like RMR LLC is stepping up to play a crucial role in OPI's potential turnaround. They've secured a commitment for future management work, which is good. However, they are deeply tied to OPI's fate. The success of RMR LLC's contracts is directly linked to OPI's ability to successfully navigate bankruptcy and emerge a stronger, albeit smaller, company. The risk for RMR is that if OPI's reorganization fails, or if the new terms are less favorable than initially hoped, it could impact RMR's revenue and stability. On the flip side, if OPI pulls off this debt reduction and RMR continues to manage its properties and business, it shows resilience and strengthens RMR's position as a management partner. The major takeaways are the massive debt reduction for OPI, which is essential for its survival, and RMR's commitment to managing through this challenging period, with new contracts waiting in the wings contingent on OPI's successful emergence from bankruptcy. It is a calculated gamble. And the corporate world will be watching closely to see if OPI can indeed get its financial house in order. Alright, that is our breakdown of the RMR Group Incorporated's latest filing. What is your take on OPI's bankruptcy and RMR's role in it? Do you think this restructuring will work? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching. See you next time.